All right, ladies and gentlemen, I hope you had a wonderful day because the market had an awful one. It was absolutely insane. Even after hours right now, we're getting a big down move. There was so much to digest. I'm telling you, from the bonds in the morning, the Google earnings, even Meta after hours. We got to talk about what really happened because this one was a double-edged sword, and that's kind of why we're dropping after the bell right now. But you even had the bond auction. You had news of the invasion and delaying it, but delaying it to put in more weapons. You had Russia talking about training for nuclear strikes. You had the UAW auto news, the stock market, the options, the CBOE. At one point, you even had options halted for 20 minutes, like all across the board for everybody. And then you even had real estate data. The bonds were already killed by this point. And I mean, this is part of the whole bonds thing. You've practically recovered the whole Bill Ackman covering short from a couple of days ago. Like I was telling you, the trauma, bro, you have to watch out. I mean, we are reliving it once again, and you see how the markets are playing out. And to top it all off, we ended up closing below 4,200. Now, some of you are going to like this. Some of you are not going to like it. At one point, I was telling you it's not the time to panic. And I don't know if this is appreciated or not, because at one point, you were back to this level just about a week or two ago. We're coming into the end of October, and it's about to get hilarious. I'm not what I'm about to tell you, but I'll show you what I'm is. But the thing is, now is the point that we can panic. Now I could say that it's justifiable because, like I've told you and shown you, even if I pull this chart beyond 2 years, this goes back in all of these levels. 4,200, this is where rallies have came to rally, where the market has came to bounce, and also where the market has came to die and acted like this was resistance. Even the down day, the NASDAQ today is the worst day on the NASDAQ since December 2022. I mean, think about it here. You didn't even get up to the level of 4,200 around that moment before taking off at the beginning of the year. So it was an absolutely wild day. There was a lot to take in. Again, even Google, after their good earnings, but people were worried about the cloud, they dropped the worst since March of 2020. So, Chad, we have a lot to go over. Market's still even moving as I am making this video. We have even plays, the earnings ones we talked about yesterday. I mean, that 2 standard deviation, you might have saw something, but above all else, we got to talk about how we end this week and then what we are getting into next week. That's the hilarious part. I'll ruin the surprise, but like the video, okay? Like the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. But here's the deal. Are you ready? Very simple. Jerome Powell is next week. By this time next week, next Wednesday, you have Jerome Powell. So not only do we end the week or the month next week, November 1st, that is literally Jerome Powell. And then the cherry on top to the cherry on top to the thing that was hilarious is that you have the non-farm payrolls 2 days after Jerome Powell. So let that soak all in. And while you're doing that, run it, baby. Yeah.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, I don't know if I mentioned it, you also got a House Speaker. They actually voted on one today and swore him in. That's another thing to add to the day, but let's see what we're doing right now after hours. Meta, the CFO, made a comment regarding the data centers and how they're at the early section of that, and that's very important, and we're going to come back to that, but overall, Meta did good. They beat on revenue, they beat on EPS, they cut expenses, and they were even talking about lowering expenses after raising them at the last quarter, and they're saying their plans for 2024, they will spend around $30 to $36 billion, which is very good considering they said they plan to spend like $90 to $99 billion this year, and this was the year of efficiency. So they were talking about AI and data centers, and that was interesting, and it's not like any of this moved it up because you did get a 10% pop on Meta, but here's the problem. Stock was closed at around down 6 on the day of earnings, and then after hours, before the release came out, it sold off another 3. So by the time the report came out, the stock was down 9-10% overall, and this was like break even, and then this was like not even 1%. So ironically, they did move in line with expectations of that 9% priced in, but now you see they're back down to that 6.6. And the reason why, that comment by the CFO after hours, I think it was implying that, one, if they're still at the early stages, they're probably going to end up spending more, but also, two, why did everything else start dropping? Not only did the futures open up, but the thing is, Meta has an effect when they spend. Just think about it. Meta just said they're going to spend $60 billion less than they did this year, next year. Who is getting that money? Did Meta pay you? I don't know if they did. Maybe some of you. But the general idea, they were spending that on NVIDIA chips and other services out there. And now, if they're going to create their own thing that could be both competition and save them money, this is that double-edged sword. It's kind of an overall net negative for everybody in the tech space, kind of competing for these AI dollars, and now we're watching these spend changes. So I guess this is the negative side that we haven't seen yet of the whole AI movement, bubble, whatever you want to call it. So very interesting, but I think that's why we're dropping, or by the time you get the morning, it'll be a host of blaming the earnings, what happened with Google, China probably reacting because China did good last night, and even then, America, Europe, it's not like we had a bad Euro session. This was all the U.S. today, so now we'll see how everybody else wants to take that one, but that is what we had after hours, and now as far as today, I'm telling you, like, you can't even track it as far as like, oh, this happened and then the market moved, because the market ignored a lot of things, and it was like right here where you had the options shut down, the VIX dropped for a little bit, had the rally, but then this turned into like the OG volatility, bounce halfway, then just sell off 2%. You have not seen that one in a while, but for the most part, there wasn't really response to headlines as much as I think it was pressure from all of the earnings, but really the dollar now back at 30, and then the bonds, I mean, they're climbing right back up to 5. So don't forget, I was just showing you this yesterday, and I mean, this is like the funny part about all of it. I guess I'll make it full screen, but like you could go watch yesterday's video, but this was the chart we were looking at, and remember, we were talking about, okay, if it could stay below those peaks, but like that's why I'm like, you can't believe it, because if we do go back above, then we're going to run into a problem. We can't believe any pops, because the last couple of months has showed us something wild, but sure enough, we are getting right back up to that 5%. You might see it by tomorrow morning, but you're going through this whole thing, and again, Bill Ackman, I mean, he's no longer here to save you, so this was a real big drag on the market throughout the whole day, month, everything. So even though we have the last days now of October, we'll see, but this ain't looking good for the bullish theory. You literally have one more week. The only other notable thing I could pull out today to show you, like even intraday and speaking broadly, it's just we have this data coming up. You have the Fed and then all of the job stuff, even PCE on Friday, but the volatility is really starting to settle in. You're getting gauges, even the VIX closing above 20, but the real highlight today was the new home sales. And why I bring this up, because this is where it all came out, and you saw the movement. Just keep in mind, bonds were already low, so for that data to come out and actually still take you a little bit lower, that's saying something, but then it bounced, and then ultimately the bond auction was here, and this is what I was talking about yesterday with the issuances. This bond auction yesterday, it came in at the screws, but the 5-year auction, it came in like, I think it was only like 2.5 basis points higher, but we were already dropping, and then you could even see it just kind of was the extra vomiting after looking very, very awful. But the new home data, why this was so important, it moved the bonds down, but it was because the data was good. So lately, that's been kind of normal, but the thing was, last month, I believe it was September 20th or 26th, it's on Trading Economics, I believe it is September 26th, but even that same day, I mean, it was a down day on the bonds, already at the low. I think this was around when Bill Ackman even started shorting things, and then the next days, it kept going lower and lower off that. Same thing with the market, but the thing was, last month's real estate data was a decline of 8% when the forecast was only a decline of 1%. So last month, it was a huge miss on real estate home sales and new home sales, and then bonds still proceeded to go lower. So did the market. Today, it was a giant beat, and you still had borderline the same reaction. So why I'm saying that's important, because good news, bad news, bad news, good news. No, it's like you're getting volatility. Maybe everything is just scaring the bonds. You're looking at data and be like, oh, recession, oh, inflation, but it's like you're not really shaking that off yet pretty much over the last 3 months. So that's why this next few sets of data, but ultimately by next week now, I think this is why it's all funny, because we're going to get to wrap up the month, see where we close in the final days, and then you're opening up with Jerome Powell next week. So the market might start getting settled in its ways, and then you're going to get the finalization tomorrow, Amazon, the next week, Apple. That's really going to clear the view here, but then we're going to see if, like, hey, at this point, I think you've really got to beat, because you're starting to even see double-edged swords out of good earnings. I mean, let me end it all with this in the name of volatility, interpreting the data. I mean, don't forget, Google's 11.6% down right now. One of its worst days. This was a good earnings. They beat EPS, they beat revenue, they missed on one segment. Again, most people aren't even aware of why that was unless you had to go read about it and look into it. So this is where it gets very interesting. The volatility is picked up. We are now, above all else, we broke the 4,200. Doesn't mean we die instantly. It's not a death sentence, but you really only got a couple days or up until Powell, and maybe Powell will be the decider of whether or not you bless the rally or bless the death, and then we go from there. But Chad, let us get into the plays. So right off the bat, man, if anything, I'm lucky I got a couple of SQQs, but my Netflix and a couple plays are holding up, a couple of new earnings plays getting clapped, but still got some to the long side, even China plays, so still going to be holding, waiting for my confirmation on that. But other than that, I don't think I'm going to get into any earnings plays unless we get some real drivers here today, or I mean tomorrow during the day. But even then, there were so many headlines, and those moves are really deceptive. Like I'm saying, I want confirmation, because it may be time to bail out of some plays and then start going for the volatility one. So either way, I think by the next 2 months, end of the year should not disappoint in terms of crazy, but that's where I'm starting with the plays. But now the second thing I'll show you is the earnings play from yesterday. We were talking about Meta, we were talking about the other ones, and I brought up Align and ServiceNow. So ServiceNow, they actually ended up closing green, which was good considering they were red. I don't think this one would have hit with criteria because it did not move 2 standard deviations. However, the other one that I told you can move, and we were talking about it on stream, Align, why I want you to see this is not to be like, oh yeah, we told you about it, oh my gosh. Is like, just watch the videos from the beginning of the week, especially if you watched any of the other ones. I've been explaining to you this ghetto standard deviation and going for double the expected move. The stock at earnings, it was trading around 255. If you took the at the money prices, this was like what, 15 and 14, about a $30 move. Double that up, that would have been $60. So subtract that from here, that's taking you to about 190 or like 185. These would have been the 2 standard deviation plays, and pretty much, I mean, you were sitting at a point, these were all within a price that were cheap. It's ironic that it moved exactly there. So it's a little bit of ghetto math involved with it, but like I'm saying, if you just watch the watch list, I didn't have the time to make this play yesterday. I ended up not going for it, but what I want you to see is if all these earnings, if you just applied this, found out what's priced in, doubled it up, looked around there, then you'll see. But, I mean, here's the moral of the story so far. Microsoft, Meta, any of the other ones, even Netflix, that one was 2 standard deviations, but like barely. I think it still ended up cucking people. But overall, the general idea here is you need a monster beat on earnings, and that's what I'm seeing with the double-edged swords. Moving forward, it's simple. Amazon, good or bad, it doesn't matter. Look at the as long as the bonds and the dollar and everything else keeps being a problem and we're getting no reprieve in any of those areas, it does not matter. Amazon's earnings, they have to blow it out of the water and just come out with making 10, 20, 30% more than expected on any sort of segment. I think that's what it's going to take. Otherwise, I think you're going to be subject to a lot of these it's borderline all coming in line. And remember, it's been a rocky year or two, so where this guidance is coming off of, it's not like it's the best, it's not like it's the worst, but I think that's why we're getting these reactions, because you really need a good driver more than anything. So we'll see how that plays out tomorrow. Again, I do have an earnings preview for you if you'd like it. I'm not going to go over the analyst stuff, but as far as Amazon is concerned, it's pretty straightforward. You could check their revenue numbers, but like I'm saying, beat or miss, it has to be a blowout versus any of the guidance. I would just take note of what the options are implying, how it's moved the last 4 quarters. Last quarter was a gain of 8. The other one was a loss of 4, loss of 8, and a loss of 7. They've beaten revenue 14 of the last 20 quarters with 1 in line. EPS has beaten 13 of the last 20, and forward quarter revenue guidance has beaten 8 of the last 20 with 1 in line. So I think that'll help us out a little bit more in understanding since last quarter. Amazon down 1.1. I think after today, though, it might have literally just caught up to the S&P there. And then XLP Staples down 10.4. And I think the Staples actually went up today. Remember, they were dumping earlier on in the month and even into the end of last month. So going to be a wild day tomorrow. Let's see how it plays out. But like I'm saying, watch that 4,200. We'll see what the latest earnings give us. But for the most part, I think you don't have to wait too long now. Next week, Powell confirms the death or Powell confirms the rally. We're going to see where October ends literally one day before that. So I hope you're ready for it. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, all of it's a plan. Oh, man, God's plan, your plan, you got a plan. But listen, everything aside, you need a plan, and stick to it. What will separate you between the greater fool will always be a plan, my friend. Even the armor is a plan. Oh, my, we tell you, put it on every day, baby. So, Chad, lock in, get loaded. Again, chop up the chart right now, too. Literally, speak now or forever hold your peace. Maybe till the end of October, maybe till the beginning of November with Powell, but this is your moment, man. Make up your mind, because this is like the 50-50 point. I know I'm ending it here. I'm supposed to get awkward, bro. That's it, bro. This is the altar call. Make your decision for Christ right now. You spent time under time. Oh, my God. I love you, Chad. I'll see you in the morning. Keep the spirits up, and God bless you all. Get ready. Let's go. Horn.